you have a great day. We'll come back to you for more later. In the meantime, let's talk about the insurance sector. The insurance premium data for December has come out. Not just that, Axis Bank has revised its deal with Max Financial. The right to acquire 7% additional stake in Max Life will be at a fair market value. To discuss this as well as the December data, we are joined by Nitin Aggarwal, the head of banking, insurance and financial research at Motilal Oswal. Nitin, good morning and thanks for joining in. Before I talk about the Axis Max deal, I wanted your thoughts on the data that came out for December. It looked like a weak month, especially for names like ICICI Pru and Max Financial. What's your view on that now?
Yeah, hi, good morning, Sonia. Yeah, really, the numbers for the month of December have been on the softer side only. I think that's a trend which has been going on for most of this year. And ICICI Pru Life and Max have reported relatively much weaker numbers, both reporting like a decline in individual APE for the month. But for the industry, the numbers were around 16% growth on individual APE. And this was led completely by SBI Life and somewhat by HDFC Life, which did relatively better versus the others.
Okay, all right. Hi, Nitin. Yesterday the market was a little bit wobbly, but we did see Max Financial move higher because now that deal is going to go ahead. They're going to be getting some more money for that 7% stake that Axis will be acquiring. My question to you is, this is good news, but how much of it is in the price? Because valuation-wise, well, the stock is not cheap any longer. Your take.
Yeah. See, this deal is very critical for Max Life because Axis is one of the largest distribution partners and it has driven the numbers all these years for Max. And being the largest banker partner that it has, so once the issue came up, it really put a question mark on as to how the numbers can unfold in the coming years. But with this, I think clarification that came yesterday, and wherein IRD has now advised that Axis can complete the deal of remaining 7% stake buying at a fair value. So that basically takes away that overhang that the stock was in, and we have seen the stock recovering in the recent weeks. Even yesterday, it was up like another 4-5% odd. And I think relatively, because the stock still trades cheaper in the sector, when you compare it to stocks like HDFC Life or SBI Life, Max is still relatively lower in terms of valuation in the pecking order. So as now the fundamental performance improves, you see growth returning back, because even this month was relatively weaker from Max. I think the stock can see some more relief in the coming weeks or coming quarters.
Nitin, hi, morning. So within that space, what do you like best? What do you like least?
Yeah. So our preference has been more towards SBI Life, wherein we believe the growth ratios are much better, and even on a 3-year CAGR basis, which is now more like logical to look at, given that prior couple of years were affected by COVID. And SBI Life over 3-year CAGR run rates also is doing relatively much better. And I think on the back of recent sharp recovery in margins, SBI Life is now on track to deliver industry-leading ROEVs. Like our published numbers, we are already looking at ROEVs reaching towards 22%, because it has now plugged the margin gap versus peers, and the growth rates are running amongst the best in the industry. So which is where we believe the valuations still leave a decent upside to play out.
Got that. So you're saying that there's more valuation upside for SBI Life. What's happening with HDFC Life? It's been a long stretch of underperformance that HDFC Life has seen vis-a-vis its peers. And I mean, even if you look at the last 1 year, right? I mean, a year back, it was at almost 700. Now it's sub 600. Do you see any scope of recovery here?
So, HDFC Life, post the merger between the HDFC Bank and HDFC Limited, which is ongoing, there has been some overhang that has come in on the stock. And separate to that, the numbers also for the most of the year were not as strong for the industry. Though HDFC Life relatively did much better, but because the protection growth has not been as much coming through, we have seen margins like other peers overtaking HDFC Life, wherein earlier HDFC Life used to be the industry leader in terms of margins. So that, to my mind, has affected the stock price performance. But I think as now clarity comes in the coming quarters, numbers already getting better, you may see some performance showing up for the company. We have currently a neutral rating on HDFC Life, which is there now for almost 3.5 years.
Okay, pleasure speaking with you. Thanks, Nitin, for joining us and giving us a quick take on the insurance sector. By the way, the pre-opening rates have adjusted absolutely flat. So let's get straight to talking about individual stocks then.